Hai, Assalamualaikum warahmatullahi taala wabarakatuh. I hope you are doing well. We will continue our lecture for the course on entrepreneurship in innovation. For today's topic, we will look into the financial analysis. There are basically four main subtopics. We will look into the balance sheet, projected balance sheet, income statement, and cash flow statement. For this particular video, we will go through the balance sheet. In terms of the learning outcome for the topic on balance sheet as well as the projected balance sheet, at the end of the session, you should be able to define the three main financial statements in an organization. You also would be able to justify the importance of having the financial statements. At the same time, you should be able to analyze the balance sheet and projected balance sheet. Basically, there are three main financial statements in an organization, namely the balance sheet, income statement, as well as the cash flow. Now, let us look at the definition. What is a balance sheet? It shows what an organization owns and what it owes at a fixed point in time. Later, when we go into the detail of balance sheet, you will know in terms of what do I mean by an organization owns and what it owes. Let's move on. Now, the income statements, it will show how much money an organization made as well as spent over a period of time. So you have a detailed flow of information on the amount of money that the organization made as well as the amount of money being spent. Normally, it is for a period of time. It can be in terms of a year or a quarter. The third item is the cash flow statements. It will show the exchange of money, okay, the money coming in and the money goes out from the account of the company between an organization as well as the outside world. Okay, so over a period of time. So it is very important for the management of an organization to acquire knowledge. That is very important. That's why we introduce in this particular program that at least you know what are the elements of the financial that need to be analyzed in terms of the monetary coming in as well as money spent. And you should be able to see as well as to interpret the data in these statements. Let us go into the balance sheet. A balance sheet is a financial report that lists an organization asset, means what it owns. It also lists down the liabilities, means that what it owes to others, as well as equity, the value of the assets after all liabilities have been paid. Whereas an equity is also known as capital or net worth, and it is the money that would be left if the organization sells all of its assets and paid off all of its liabilities. This leftover money belongs to the shareholders or the owners of the organization. What is the content of a balance sheet? So there are three main sections. The first section of the balance sheet gives a detailed list of the organization's assets, including long-term assets such as real estate and machinery. We also put down the current assets, anything that can be easily converted into cash in less than a year, and also cash, right? So the assets in certain organization, they define the assets that worth 3,000 ringgit and above. Below 3,000 ringgit, we considered the item as inventory. The second section consists of the organization's liabilities. So this section is particularly of interest to investors. Okay, let's say investors would like to invest some amount of money to the company, they will look at the liabilities. And due to the fact that the organization will face problems if it has an unusually high amount of debt. So the amount of debt will appear in the liability section, especially if the debts have to be paid within a short period of time. The final section, which is the third section, consists of stockholders or shareholders' equity, and it will provide information on common and preferred stocks, retained earning, and capital surplus. We can see that the second and the third section, which is the liabilities and equity, may be combined in some balance sheet. Now, let us see an example of a balance sheet. So, as being highlighted earlier, a balance sheet will have a list of the assets. We also have the liabilities. Okay, so in the asset items, we have the cash, we have the accounts receivable, merchandise inventory, and total current assets. We also list down the plant and equipment, for example, like amount of the value of the equipment. It also include the accumulated depreciation of the equipment, right? So on the left hand side, we have the total asset amount to 218,000 ringgit, and on the right hand column, we have the short term debt. Okay, and we have account payable, right, as well as salaries involved. We also have total current liabilities. We have long-term debt. Okay, maybe you have 5 years to 10 years equipment debt. Okay, and total liabilities is 210,000. And we also put down the owner's equity. Okay, so this is the third item. Owner's equity is 8,000. So total liabilities and owner's equity is 218,000. So you can see here, can just repeat, we have the asset, we have the liabilities, and we have the owner's equity. So it has to be balanced between the two columns. That's all for now. We will continue on the projected balance sheet on the following video. Thank you very much. If you have any question, please put your comments on the YouTube link. Bye bye for now.